Welcome to another special edition of The Capitalist Investor. And one of the interesting things that nobody takes advantage of or has, which is one of the most important thing to have, is a strategy. If you don't have a strategy, you automatically are disinheriting yourself, disinheriting your portfolio. It's like a mixed bag of things that you don't know where it's going if you don't have a strategy. You need to know where you're getting into things, when you're going to buy something, when you're going to sell something.
It's been easy though, right? The market's just been going up for a decade, so we didn't need a strategy, right? It was just all fun times, and you just bought Apple, and Apple worked its way up to a $2.2 trillion market cap. More, actually, almost 3. Did it cross the $3 trillion threshold?
Close. It was very
2.2
close.
now. So it's like, strategy isn't something we've really needed for a while,
past
right?
2 years, or really even you can say the past decade, you could throw money at the wall and basically make money, right? So when times are different, you have to especially have a strategy.
I have a client that I just onboarded yesterday, 50% in stocks, 50% in cash. And he wanted to know how to invest that cash over the course of time. So we decided to ladder treasuries 3 months, 6 months, 1 year, 2 years. And as those come due, we are going to put that money to work.
So let's talk about that, Ryan. What do you think about the barbell strategy?
Well, so I love it, because when we're talking about strategy, there's what are we preparing for? And so how do you invest if we don't think that the market, and we discussed this yesterday, I mean, if we don't think the good times are going to last forever and it's not going to be up. And, one thing that I would point out, so we've had some hiccups in the recent past. So 2018, at the end of 2018, the Fed they signaled that they were going to raise rates, and then they halted. And so, and then of course, COVID, that was a black swan event, and it was very unique, and it didn't last long though. And so this is kind of the real recession, right?
Yeah.
That we're feeling coming on here. So if we think it's going to be a sustained downturn, what do we do? Do we just sit in cash, right?
Yeah.
We don't want to lose money. But the dollar's also subject to changes in value, and it's kind of shrinking down now too. And inflation is a thing that we've had for the first time in a while. What do we do?
One of my buddies tweeted this out, I think it was yesterday, about, and this is a very, very aggressive metaphor, but what would you prefer, Ryan? Would you prefer a non-fatal heart attack or a toothache that doesn't go away and you can't figure it out for about 2 years?
Oh boy, I think I'm gonna
a horrible.
I'm gonna go with the toothache.
Okay.
Okay. Just in case.
The interesting thing is, some people would say they would rather have the non-fatal heart attack, because having a toothache constly for 2 years straight that you can't figure out would really suck, right?
Yep.
At least you can make lifestyle changes maybe to help the non-fatal heart attack. That's the same exact thing, kind of, and I love that metaphor because it's kind of similar to what's happening in the market and with the recessions. Like right now, we are in that constant tooth issue.
Yep.
That's prolonged. It's not quick. It's long.
1 year down, right? 1 year down already.
It's been 11 months, 12 months almost. And the heart attack would be a quick sell-off, a jolt
COVID,
to the recession.
Really.
We get back on track. Yep. That's not happening. We are in a prolonged recession that most likely will last maybe longer than any recession has in history besides the Great Depression.
Right. So again, I don't want to pick on passive investing, but there are products that you can get some return. So I don't like the cash laying around. To answer your question, and we digressed a little bit, but so I don't want cash sitting around, and especially in an inflationary time. I mean, each dollar is worth less tomorrow. So, I want a little bit of a return, but if we think that things are going down in the near future, I don't want too much risk. And so you mentioned bond laddering. Absolutely. So there's some insurance products that at my age are probably not reasonable, but I'm not opposed to. And then, you want to make sure that some of your nest egg is secure and not subject to the whims of the market over the next couple of years. And especially if you're in that 5-year window that everyone talks about. So a very good question. Very good analogy too, by the way.
It's not mine. I will shout out Simon Rhee is his name.
Yeah.
Very good technical trader.
Yeah.
And he's one of my buddies, and he tweeted that out. I resonate with me. Dollar cost averaging. Let's talk about, I think you hit on it a little bit, but dollar cost averaging is part of that.
You're really, that's what you're doing with the bond ladder.
Yep.
So dollar cost averaging is, hey, as you get paid, or if you have cash laying around, getting in, in increments. And so the bond ladder strategies functionally
what we're talking about is a risk management strategy.
Absolutely.
Risk management should be part of every strategy out there. If you're not managing risk, you don't have a strategy.
Absolutely.
So, I mean,
Absolutely.
that's ultimately what we talk about. And most people are over leveraged and take on more risk than they should.
Yep.
And there are times to take on more risk than you should.
Right.
When times are good,
Right.
you can leverage your portfolio and make more money and take on more risk. Higher beta,
You can still take some risk. You know,
higher
it's not
beta
the
stocks.
Yeah, absolutely.
I'm not saying leverage your portfolio
Right,
through
right.
margin, but
Yep.
maybe leverage your portfolio with higher beta, higher growth names.
Absolutely.
Now is not the time to do that. But you have to know what your strategy is when you're getting rid of something, when you're buying something, and be disciplined. Consistency
Absolutely.
and discipline are the two traits that you need to be a successful investor.
Plan and strategy. You started there, and that's a great place to end, right?
No? We'll end for your guys' sake, because if we don't end, we'll talk for hours.